Hello, this is Vance, and this is Thursday, February the 16th, 2017. These are the CL trades for today using the slow hand method for price action. Well, today was I don't know if you call it a range day, but I guess you call it a big range day. And price traded all the way down here, traded all the way back up. And there really was only a couple of two tight ranges. So between these, if you look at early morning this morning, and if you look at from really about 7:30 or let's say 6, we had this really tight range, which really was 15 ticks. The open was right here at 9 o'clock, punched up, didn't really find couldn't go any higher, and then it really rolled over. And this was really the first trades that I saw. I was right here at just really 9:30. I wasn't interested in going long because it was the top of this range, and I wanted to see what price would do if it ever came back down here. But I think there was enough room, and because price stopped up here from about, and let me just kind of put the time period here, from about just after 9 o'clock till 9:45. So, in absence of price really making a strong push up, it's got to turn over. Now, the other thing is that I switched over to the April contract today. Took over on volume yesterday, on the overnight, and so I switched to the April contract, and so it's 0417. So anyway, price turned down here. This turned out to be a real good trade. There really isn't any other place to get in. Unfortunately, I mean, the fact of the matter is that when you look at where price really kind of hung up, it was really down this area is where the low was. And when price got to this area, you don't know how it's going to react. There wasn't a clear enough signal here for a long, but certainly there was still more weakness here. So you could probably this weakness, you could sell, the price turned over here, and I guess you could have seen a reason to get in here, but I didn't like it. The thing is, I was in this trade, and so didn't even faze me to even think about doing that. Didn't expect a turnaround. I guess I could have added more here, but I didn't. Price kind of turned down here until it got to this low. Now, I want to talk about this area. You look at this was yesterday's low. This price right at 53.23, and you can see price it punched through there, but then it really hit support. So there was support here, probably left over from yesterday's low, I suspect. And if you looked at, I remember mentioning it yesterday. Here was the day before yesterday. Now this is, of course, this is the April contract, but you'll see a similar issue on yesterday's March contract. The point is that it looks like there's support down here. So when price moves down to this area, and this is a pretty strong move, doesn't take that long to complete. I mean, we're looking at 9:27. Takes about, by the time it actually gets down here, it's an hour. So we're looking at from a high of, let's call it 54.08 down to here is 53.12. 90 ticks when it moved its way down here, particularly this last gasp right here, this brief move. Now, nice turnaround pattern. First pullback, breaks the trend channel, comes back down to here. Now, yes, this is a second entry long. Now, if you're looking at getting in here, you want to make sure that your stop is below this area. And I don't know if this is early. You can make it. This is a more aggressive trade to take it right here. But, it's based on the time period. So we're looking at from here, this is 10:30. This is 10:22. This is 10 minutes later. It still hasn't kind of turned over and headed back down. And then we have this bouncing at this area, breaks up higher. Here's 15 minutes later, pulls back down. We have a little bit of overlap, pulls back down to here. This is 10:59. This is almost 11 o'clock. And again, looking at this, here's your 15-tick stop box. Remember the overlap, the 30-tick move. So if you look at from the bottom of this range to the top of the range, we're looking at 30 ticks. The other side of it is this. If we get in on this trade, your stop is below these areas. If you're looking at a shorting, your stop is above these areas. Frankly, I wasn't looking at a short, because what you really have to think about is if you're looking at this trade going on, I can do that, but if you're looking at a short, you're looking at where's that move. The move took place from here. Let me miss a minute here. Take this place down to this area, and now in order for it to continue down, you're probably going to have to look at another leg down to this area. Now, is that realistic? I don't know. I mean, if you look at it from the perspective of where we would wind up, we didn't have that for a couple. This is, well, of course, this is the April contract. But if you look back, I wasn't expecting it to. I mean, I'm not saying that prices couldn't kind of collapse down to this area, but it was probably unlikely. So as a result, I was looking more for areas like this. Like this is solidified. Now, I was talking to a couple of traders. They were looking at these areas. They went long here, and I don't think that's. I think it's a great setup. I think it's a very incisive. Your stop is below these areas here. You can enough room to get out for your first contracts, your 15 ticks. And if you get it on this one right here, yes, you might have to limit in on this one. But certainly, once you limit it on here, and it starts it's moving its way up, if you moved your stop to 10 ticks plus 10 ticks, you were never in jeopardy. So if you entered at, let's say, 53.25, price never really came back down to that. Well, 53.24, let's say, price never really came back down to that area. And so it kind of looked like it was a couple of times, but then it met support. And look at this move. This move right here went all the way from, let's say, 23 all the way to 88, almost broke $54 until it kind of went back into another channel. And so really had a spike in channel here, a couple opportunities to get in. In fact, if you got this one, you got your first contracts off. And even if you came back, even if you got your first contract off and you left it at break even, depending where you got in, you might have survived here. If you kept your stop low, obviously, you would have survived. But the fact of the matter is that even if you got in and you got stopped out, looking at going long again, one of these legs, I mean, you can kind of take advantage of that again. I mean, you don't know whether price is going to continue to go up or it's going to turn over. But I think that once you've got this one move, you got to think that at least to the end of the day, you might it's going to trade within a range. And if you get a couple of good short scalp trades in here, I don't think there's a real problem. Especially if you're 15 ticks ahead, keep your stop at break even, see if it's going to run. And fact of the matter is that this was a really good move. So not a lot of trades today. In fact, if you didn't get on this one, this is pretty much the first one, I suppose, more than anything else. I guess you could have argued that maybe you could have taken a trade here, but that was, that's right at 9 o'clock. I don't know, with this turn down like this, I maybe you can make an argument for that. But, there wasn't a lot, but once it headed this direction, if you got on this one, you're in terrific shape, and then come in the turnaround and go from here. I wasn't here for this. I wasn't here. I was here, but I was kind of preoccupied. I had to go into the dentist today. Had a bit of a problem with my tooth, so I wasn't really involved in any of this. Like, I wasn't really looking at this. I was on this trade, and I was talking to a couple of guys who were like a trader was talking about this areas, and when he mentioned it, they sent me a couple of photographs of it, and pretty decent setup. And I think that if you look at this kind of trade, and you look at some of my videos over the course of the last few weeks, I'm sure that you can see that very similar setup for this. If I hadn't been preoccupied and if I hadn't been in this trade here, I was in this trade all the way down here. So, I mean, you get how many moves of this like do you have? Are you trying to look at getting every single trade out here? I mean, if you're in on a trade here at 90 at 53.88, let's say, or 53.80, and you write it all the way down to 53.20, how many trades like that do you need today? Do you need do you need this big move here? I mean, I don't think that's the case. I mean, you have to exercise patience. There's always another day. And that's not only for winning trades, but if you've lost as well, there's always another day. You got to keep I could easily miss this completely. And I might have been short again here, and price comes back up here. Now, of course, if I got short here, I get my first contracts off and I'd be fine. That's the other thing, but that's a different story. If you're looking at shorting the market up here, you got to limit in to short. When price gets down here and you get these strong bars, I don't know, do you stick with this? I mean, you look at this overlap here. Price comes back up here, touches you out. Do you get back in at this because these bars look like they're going to be short again? You have to get in on the fringes. You have to limit in to go short, or you have to limit in to go long when you see ranges like this starting to develop. And the problem is that you don't see them right away. You don't see it until you can't see this. Like price comes down to here, it gets down to this area, you're not seeing it until it's such time as when you do have some at least a double bottom. So here's your first double bottom here, and as it moves up, now you get another double. You get a double top, getting in on the fringe, and like this trade right here, it's giving you some room to get out. Now it might be somewhat aggressive, but your stop is below here. And how long do you wait it out for? You continue to wait it out. If you're up 10 ticks, you'd have been break even on this one. If you kept it down there, look at this, right the very next bar. If you kept it in there, even if you sweated it, the very next bar puts you in at your break even. That might be in a place where you add it on, like you add on to this trade. I mean, if now it really looks like it's bouncing at this area. Look at this, like from down here, even if it's a little bit lower. Look at that. We've got the first pullback. We got another pullback down here, bounces. This, you can make an argument. Your 15 ticks is still below here. Another bounce right here. And if you just hang on to it, does it test down to here? Your stop isn't. Even if you move it to break even, it's not in jeopardy. And look at that move. Look at that take right off there. Now, your first contracts are off at 15 ticks. The rest of them are riding all the way up here. And once you get to this area, who cares? Take your profits, count them on the overnight. Look at tomorrow morning, see if there's anything else that's going to be set up for the next day. And if not, just kind of wait till next week. So that's just a short video. One other thing, I had I'm still getting some applications for the slow hand method of price action. Let me put that up here. I'll show you what it is. Okay, here's the address, Mindful Trading, slowhandmethod at gmail.com. If you're interested in participating in it, let me know. On top of that, this Saturday, let me just put that up there too. Okay, Saturday, February 18th, 1 p.m. EST. I'm going to have a short presentation about what I'm talking about as far as the slow hand method is concerned, but more importantly, the Mindful Trading Program for individuals who have requested application forms and for individuals who maybe are interested in submitting one. And let me tell you why. I want to gather as many people, give the opportunity to participate in this program as much as possible. Number one, I'm just working through this. It may only be the only one I ever do. I don't know how it's going to turn out. So it's going to deal with, I'm going to answer any questions people have in reference to what I'm talking about as far as mindful trading is concerned. I had a presentation today where a few people had showed up and seemed to go pretty well. So I'm going to do it on Saturday again. It's to encourage individuals to find out what I'm talking about with it. And I want to do it in an environment. So if you'd like to participate or you'd like to hear what I have to say about it, you have to send me an email. And the reason I'll send you an email and give me your information so that I can send you an invitation, either a Skype address or a Skype or I'm trying to set up Skype for Business. I might be able to give you a URL link without having to actually join Skype. But I'm still working through that with the Microsoft boys in California. But I was trying to do that today. Can't really kind of get it working, but I'm more familiar with some other programs, not with Skype for Business, but I'm giving it a shot anyways. I want to, it's supposed to link up very easily with Office 365, but I don't seem to be having much success with it at this point in time. So again, if you send me an email to slowhandmethod@gmail.com and you want to hear me talk about the mindful trading on Saturday, February the 18th at 1 p.m., it'll take about half an hour, 45 minutes, do that. But you have to let me know that you want to listen in. Okay? So again, this is Vance. Thanks for watching. Bye for now.